Welcome to the Apartment Investor Show, where we help you get smart and invest smarter with multifamily real estate. I'm your host, JC Castillo, founder and managing principal of the Multifamily Property Group. And joining me, as always, is my good buddy, my co-host, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, where are you today?
I am in the great state of Colorado. So we've just finished up doing a little skiing up in Colorado. So enjoying some time with my family. And so hopefully everybody's had a good Thanksgiving and they've enjoyed spending time with their family. And just looking forward to talking with our guest today and learning a little bit more about what's going on in his world.
Absolutely. Well, Paul, today we've got a great topic for all you viewers out there. Last week we talked about rent control and some national market trends. And so I think the thing that we talked about last week was there is a bit of a crisis in the affordability spot across the nation. Mm-hmm. And you're starting to see some regulations happening as a result of that. One of the interesting things about what we're going to talk about today is we're going to talk about how Dallas-Fort Worth, now we're going market specific, how Dallas-Fort Worth is bucking the national trend of affordability. It's a really interesting topic to talk about, given that there is this sort of national crisis level affordability issue. So without any further ado, what I want to do is introduce Mr. Paul Hendershot of Costar, and he is the Director of Marketing Analytics for the Dallas-Fort Worth Metroplex. Paul, welcome to the show, and thanks for joining us.
Thank you. It's great to be here.
All right. Well, Paul, why don't you give us a little bit of background on yourself and quickly talk about what we're going to cover today?
Yes, I've been with Costar for about a year as the Director of Market Analytics for DFW. Prior to that, I was with JLL and also worked in quite a few economic development roles. That was really my first love, you could say. And I actually graduated from the University of North Texas here in Dallas. Both my undergrad. Go Mean Green Eagles. We're not doing so great this year, but we're in a constant rebuilding phase. So anyways, so I actually have my master's and my undergrad from there, and also had an opportunity to teach in applied economics at the university as well.
Wow.
Well, Paul, you've got a really impressive background, but you've also served time in the Air Force as well, and that was pretty impressive. So why don't you tell us a little bit about that as well?
Yeah, I joined the Air Force when I was 17 years old. Growing up in Western New York, looking at the economy, I was, seemed like a good idea. And it actually was a great opportunity. Anyone that's looking, a young man or individual, for that matter, woman, who really wants to travel, meet some lifelong friends. I served in Washington, D.C. in presidential communications for a year and a half. And then spent 3 years in England, actually working on a communication site, and also the opportunity to serve in Bosnia as part of the implementation force in 1995.
Well, thank you for your service, Paul. We do appreciate that.
Thank you.
Well, let's get right into it, okay? We're going to talk about Dallas-Fort Worth and talk about affordability and how it's bucking the national trend. So why don't you start us off with sort of your overview on what the market's looking like, the apartment market's looking like in Dallas-Fort Worth?
Yeah, let's just kind of give you a sense of scale. Dallas-Fort Worth is the third largest market in the country. We have over 730,000 units behind New York and Los Angeles. And ironically, Houston is the fourth largest market. So, there's definitely a sense of scale to DFW. And a lot of that can be attributed to the population growth. We continue to add over 100,000 people a year. And a lot of that is largely due to our job growth, and we'll get into some of those other drivers. But what's really making DFW more affordable is the types of jobs we're adding. We're adding over nearly about 100,000 jobs a year. One out of every 5 of those jobs are considered tech jobs. Some of the more recent announcements we've had is Uber is announced they're putting 3,000 jobs in Deep Ellum, making it the largest hub outside of San Francisco. Salesforce just signed on for 100,000 square feet in Uptown. McKesson Pharmaceutical distributor, Fortune 500 company, just announced is moving to Irving. So we're creating a lot of high wage jobs in the region. and that's attracting the best and brightest from around the country to DFW. So what does that mean? And we've been doing this for quite a while. I mean, the economic miracle of Texas is pretty well documented. And but when you really start to look at what this means to the apartment market, since 2010, Dallas-Fort Worth has added more units than anywhere else in the country, over 120,000 units. That's about 28% of our inventory. So you think about it, we have a pretty young inventory where we kind of have this, not a barbell, but we had a tremendous amount of construction in the 1980s. That's about 30% of our inventory. The kind of Dallas era boom, the TV show, obviously that was a great time for Dallas as well. And so you have a lot of great value add plays, particularly in the mid cities area, where the rent growth in that section, that area is about 4.5%. And then you have a lot of growth in the northern suburbs, uptown, where you're seeing a lot of this high-end 4- and 5-star product really redefining the place as well. So you have a very high growth and stable market. And we add about 25,000 units a year. And I know some folks look at that and they're like, oh my God, how are you keeping up? Well, our vacancy rate has remained stable, right at about 8% through this entire cycle. And because we're absorbing about the same amount. So I would say we're a very balanced and growing market.
I mean, I think the bigger thing that I'd like to talk about is, do you foresee the affordability staying consistently good in the Dallas-Fort Worth Metro? Do you see anything sort of taking that off the tracks, if you will?
Well, I mean, we have to keep producing those high wage jobs. That's really the economic underpinning that's driving this region. And then also in turn, the developers in Dallas have done a great job of building product for the market. I mean, they're not pricing themselves out as we see in other markets. Now, looking back the last 2 years, if we want to look at history as any indicator of the future, the average person spent about 22%, which I know 2% is not a huge spread. But for the average folk, maybe that young couple who's looking to save money for that first home, or that extra money you could put in your savings account or go on that trip, that translates to about $2,000 a year, and that's real money in someone's pocket. So I foresee in the short term, as long as we continue to produce these high wage jobs, Dallas will be in great footing in terms of the affordability. Now, at the same time, why that's one side of the coin, we'll also see more renovations in Dallas than we ever have in the history of the last 10 years. So we're creating this great stock of quality product that's in that, I'd say, C+ to B- for the other, the other income levels across the Metroplex as well. So I'd say we are building a great, solid, stable market overall.
Do you see any concerns, Paul? Do you see anything sort of that you would say should be a concern for the Dallas-Fort Worth market looking out in the horizon here?
Yeah, I mean, one, I think is a concern for everyone is the labor crisis. The recent survey, the American General Contractors Association came out with some data, and 84% of developers or construction companies are having trouble finding quality labor, particularly those plumbers, electricians, cement, guys, like anything that requires that kind of a technical trade. And what that's resulting in is just extended construction times, upwards of 5 months on average across the U.S. But we're experiencing about the same thing here in Dallas. So if there's one thing that I'd say in the multifamily market that's keeping me up at night, I would say that's one of them. Now, in terms of we have such a robust logistics sector and transportation. For example, around Alliance Airport alone, we have over 10 million square feet currently under construction. Just to put that in perspective, that's more than Philadelphia or DC or Los Angeles. So we have more construction in one submarket than we do for many major markets in the U.S. Now, when you look at the uncertainty created by Brexit, you look at the uncertainty in this trade skirmish we've got ourselves into with China, the Middle East. There's obviously some increasing rumblings with the instability in Iraq and Iran. We're keeping up with the news there. Will that cause the price of oil to spike? Will that create an economic slowdown? Which Dallas-Fort Worth is definitely the cleanest shirt in the dirty clothes hamper, but we're not immune to these forces that we will be impacted by. So I think I think Dallas-Fort Worth is on solid footing, but I'm definitely keeping my eye on those issues.
Yeah, well, I think you wrapped it up perfectly. Dallas-Fort Worth is the cleanest shirt in the dirty clothes hamper. I love that. We're going to go with that. Paul, how can people get a hold of you guys? You guys, Costar provides some amazing analytics to help investors make smart decisions, looking at metros and markets and whatnot. What resources, or how can people get a hold of you if they want to understand further how Costar can help them?
Well, you could go to our website, Costar.com, and just to kind of put that in, we are we have the most robust data sets of anyone out there. And if you want to get a hold of me, you could just P Hendershot at Costar.com, or and also I just want to make a mention that while I serve DFW market, and that's where I do my work, there's about 100 of us across the country. So you can call the equivalent of Paul Hendershot in Boston, in Austin, Houston, Los Angeles, San Diego. So we really do provide a unique boots on the ground perspective that you won't see from a lot of research companies.
Paul's data is fantastic. It's definitely up to date. And he will be spending some time with us on January 15th at one of the Old Capital Speaker Series. So Paul with Costar will be there January 15th with Greg Willett from RealPage. And so we'll have 200-300 people at the Old Capital Speaker Series, Grapevine Convention Center. You need to RSVP, so go to oldcapitalpodcast.com, oldcapitalpodcast.com, and RSVP to that event. You'll have a chance to ask a question yourself of Paul or Greg or any of us, but it's a great networking opportunity to meet other like-minded investors that have an interest in multifamily and apartment investing. So great information. If people want to get more information about you, JC, about what you do, tell us a little bit about what JC does. What we do.
Well, we've been helping investors make smart multifamily investment decisions for the last 13 years. Multifamily Property Group is our company. We are a full market cycle company, meaning that we've been buying and renovating and selling value add B and C class properties since before the Great Recession. So we were buying before. We bought, during the Great Recession and coming right out of it. So I think with us, what you'll get is a very good feel for not only what can go right, because we've obviously had a great run, but also we are very sensitive to what can go wrong because we've seen both sides of the coin. So we always offer a free 15-minute consultation to any viewers out there that would like to get some advice on how to make smart multifamily investment decisions. They can go to our website at multifamilypropertygroup.com. Again, multifamilypropertygroup.com, and we would be happy to set up a virtual meeting and see if there's any way we can help you out.
Sounds great. Again, I'm Paul Peebles with Old Capital. Paul Hendershot, thanks for joining us today.